Welcome back to Squawk Boss. Let's welcome back Karl Eggerss. He is Chief Trader at LaferFrischberg.com, joining us now live from the CME once again. Good to get back to you, sir. You know, we've talked about all the things as to what happened overnight. You know, with Marty, we're talking about the weak demand for the Treasury auction, and Tim Geithner, of course, unnecessarily confusing the market with regards to the US dollar. Let's get down to the nitty-gritty. How do we make a buck right now? Are stock prices going to go up or down from here on?
I think it's real interesting because we're at one of these levels where if you go back to October, every time the market ran up, there was always that time to short stocks and say, well, we're going to eventually go lower and make new lows. And we did that consistently. So every time we had a rally, selling the rally was the most profitable thing you could do. This time, you see that it's struggling going down. We had a down day Thursday and Friday in the States, down just a little bit. And then, of course, we came back with that huge day. And then here we are, down again today, selling off, and then we get a rally into the close. So the bears are having a tough time right now, and I think that's bullish in and of itself. Yesterday, we saw, in the United States, we saw politicians on television, and the stock market actually rallied. And then when they went off television, that's when the stock market sold off. So that's something different that we haven't seen in several months. But I think ultimately we do go higher. I think a lot of investors, traders, whoever you are, you don't want this to go up too far too fast. I think you do want it to rest a little bit, move sideways, but sometimes a strong market won't let you in. And everybody wants it to pull back and say, well, if I'm underinvested, I'll wait for a dip. And you may not be getting that right now. And I think there's a lot of people betting against the market, and I think that's the fuel converting those people to bulls that's going to propel this a little higher. So I do think ultimately we go higher, potentially for a few-month trade, not necessarily a new bull market.
Do you get the feeling that on the macroeconomic front as well, fundamentally things have shifted towards the more positive? You know, before it was just negative data after negative data. Now it seems to be more mixed. And in fact, overnight we got some pretty good data on the durable goods orders front and the home front as well.
You're right. And I don't really pay attention too much to because a lot of them are revised, as you know. But we are seeing some mixed data, and you're right, everything was coming out horrible. I think investors are a little numb, a little used to this. We've had several months go by now. I don't know if the economy is getting stabilizing or getting much better, but I will say that the rate of decline is getting better. You know, we were falling off a cliff. You kept hearing that term, we're falling off a cliff. Now we're probably not falling off a cliff, we're just getting weaker. And so it's all relative, and I think things are actually improving somewhat from that standpoint. To say they're going to be better in 6 months, I don't think so. I still think they'll be worse than they are today. But again, it is stabilizing somewhat. And we all know the stock market leads the economy by, at least 6 to 9 months. So we could be seeing some signs of that right now, but I still feel like this is a tradable rally that eventually will need to be sold, but I think it's going to be at much higher levels.
Yeah, okay, so if we're talking about levels, I know you can do the technical side as well as the fundamentals. So what kind of levels should we be looking for? What do you see on the charts that people, either the bulls or the bears can grip onto?
I think the S&P 500, we're kind of near the 75-day moving average. And, once we get above some of these technical levels, I think the S&P could get to 900. I think the Dow could get to 9,000. And remember, from the bottom to that point would be a 30% rally or so. At that point, you have to start looking to take some profits, at least in a few things, and be defensive. And I would say to the average investor out there, please do not let your guard down, because even though things feel a little better than they were, you have to treat every position as a trade still. And when things are strong and they're starting to weaken, lose their momentum, you have to take profits. That's the type of market that we're in. And I think investors nowadays have a lot of tools in their tool belt, whether it's futures, whether it's options, whether it's exchange traded funds. They have to utilize all those things in order to make money in this market. Otherwise, the old days of just buying a big basket of mutual funds isn't really working. And it may for the short run, but in general, we're not seeing that overall big appreciation upward in stock prices yet. So it's still trading environment. I just think this one's going to be a little longer than the trades we've had in the past few months.
Yeah, gone are the days of the dartboard, right? Thanks very much for joining us, Karl Eggerss, Chief Trader at LaferFrischberg.com. Over to you, Marty.
We got earnings season underway up in Hong Kong. Let's get to Emily Chan. Ems, how's it going?
Hi there, Martin. That's right. Earnings season in full swing here in Hong Kong. We had a slew of companies reporting their results yesterday, including Li & Fung, PetroChina, ICBC.